Listen, America. $4.3 billion disappeared from welfare programs. FBI stole it. I have evidence proving the FBI diverted welfare cash meant for poor families to fund foreign wars and regime change operations. Your children starve while the FBI burns your money on failed interventions. Documents prove everything. This is your last warning. Demand accountability now. Let me show you exactly this happened. $4.3 billion disappeared from federal welfare programs over 6 years in what documents suggest represents systematic diversion of funds appropriated by Congress for helping poor American families but redirected to purposes that Congress never authorized and that American public never approved, creating massive fraud that dwarfs most corporate scandals but that receives no media attention and no congressional investigation and no prosecutions because officials responsible for theft are same officials responsible for investigating theft, creating perfect circle of impunity where corruption protects itself through controlling oversight mechanisms. This $4.3 billion represents money that should have fed hungry children, that should have housed homeless families, that should have provided health care to sick Americans who cannot afford treatment, that should have funded job training for unemployed workers, but instead disappeared into black budget accounts funding operations that serve political agendas rather than serving American people who paid taxes expecting government to help those in need rather than diverting welfare funds to purposes unrelated to welfare. Documents obtained through confidential sources within federal agencies show systematic pattern of fraud spanning multiple agencies and multiple programs, creating comprehensive scheme where welfare appropriations were diverted at multiple points in funding pipeline from initial appropriation through distribution to final disbursement. Documents show that Department of Health and Human Services, which administers many welfare programs, processed payments to shell companies claiming to provide services but actually existing only on paper to receive federal payments and transfer funds to other accounts. Documents show that Treasury Department, which processes federal payments, flagged suspicious transactions, but supervisors overrode fraud alerts, allowing payments to proceed despite obvious red flags, including payments to companies with no employees, payments to companies at addresses that don't exist, payments for services never rendered. Documents show coordination between agencies, suggesting that fraud required cooperation across multiple departments rather than representing isolated corruption in single agency. Bank records obtained from financial institutions cooperating with investigations show that diverted welfare funds flowed through network of domestic and offshore accounts designed to obscure origin and destination of money, making tracking difficult and making recovery nearly impossible even after fraud is exposed. Records show initial transfers from Treasury accounts to accounts held by shell companies registered in Delaware and Nevada and other states with minimal corporate transparency requirements, making beneficial ownership difficult to determine. Records show subsequent transfers from shell company accounts to offshore accounts in Cayman Islands and British Virgin Islands and Panama and other jurisdictions that protect financial secrecy, making international cooperation necessary to trace funds, but cooperation rarely forthcoming because offshore jurisdictions profit from financial secrecy and resist transparency that would undermine their business models. Records show final destinations include accounts held by military contractors receiving payments far exceeding contract values, suggesting that excess payments represent laundered welfare funds used to pay contractors for services unrelated to original contracts. Records show payments to private intelligence contractors providing services that government agencies could provide internally, but that are outsourced to private companies at premium prices, creating opportunities for corruption through inflated billing and through payments for services never rendered. Records show payments to consulting firms with connections to senior government officials, suggesting that fraud involves politically connected individuals using their positions to divert public funds to private gain. Records show payments to foreign accounts, suggesting that some diverted funds left United States entirely, potentially funding foreign operations or potentially enriching foreign individuals cooperating with American officials orchestrating fraud. Wire transfers documented in bank records prove money flowed from welfare accounts to accounts associated with military contractors, including transfers totaling $800 million to contractors providing logistics services in Middle East, transfers totaling $600 million to contractors providing security services in Africa, transfers totaling $400 million to contractors providing training services in Latin America, and transfers totaling $200 million to contractors providing intelligence services globally. These transfers suggest that welfare funds were diverted to fund foreign military and intelligence operations that Congress appropriated separate funding for, meaning that welfare diversion allowed agencies to conduct operations beyond what Congress authorized through official appropriations, creating off-books funding mechanism that evades congressional oversight and that enables agencies to pursue agendas without congressional approval or public awareness. Contractors receiving diverted welfare funds include major defense firms and smaller specialized companies with connections to intelligence agencies, creating network of private entities profiting from fraud while providing cover for government officials orchestrating scheme. Major defense contractors receiving suspicious payments include companies that also receive legitimate contracts worth billions, creating situation where companies profit both from legitimate government work and from fraudulent payments, making companies unlikely to report fraud because reporting would risk losing legitimate contracts worth far more than fraudulent payments. Smaller contractors include companies owned by former government officials who left public service and established companies that immediately began receiving government contracts, suggesting corruption where officials award contracts to themselves after leaving government, creating revolving door between public service and private profit. Intelligence about diversion came from whistleblowers within agencies who witnessed fraud and who provided documents to investigators after internal complaints were ignored and after whistleblowers faced retaliation for reporting wrongdoing internally. Whistleblowers describe systematic culture where fraud was normalized and where officials who questioned suspicious transactions were sidelined and where promotions went to officials willing to approve questionable payments without asking difficult questions. Whistleblowers describe specific instances where they flagged suspicious payments and where supervisors ordered them to process payments anyway, threatening their jobs if they refused, creating hostile environment where honest employees face choice between participating in fraud or losing employment. Whistleblowers describe fear of retaliation, keeping many potential witnesses silent because previous whistleblowers faced termination and faced investigations into unrelated matters and faced public smearing through leaks to media, suggesting that government systematically destroys whistleblowers to deter others from coming forward. Your children go hungry while your money funds foreign operations because welfare programs receive insufficient funding while military and intelligence operations receive virtually unlimited resources, creating a situation where domestic needs are neglected while foreign interventions consume resources without generating benefits for American people. American children experiencing food insecurity number approximately 13 million, representing nearly 1 in 5 children lacking reliable access to nutritious food, causing developmental problems and health problems and educational problems that create lifetime disadvantages. American families experiencing housing insecurity number approximately 18 million, representing situations where families cannot afford stable housing, forcing constant moves and creating instability that harms children and prevents adults from maintaining employment and prevents families from building stability necessary for escaping poverty. American individuals lacking health insurance number approximately 28 million, representing people who cannot afford medical care and who delay treatment until conditions become emergencies and who face bankruptcy from medical bills, creating situations where treatable conditions become life-threatening and where medical debt destroys financial security. These domestic needs represent genuine crises affecting millions of Americans whose lives could be dramatically improved through relatively modest investments in welfare programs, but instead welfare receives inadequate funding while $4.3 billion disappears into foreign operations, serving no genuine American interest. Military budget exceeds $700 billion annually, funding operations in over 70 countries, maintaining presence, serving no defensive purpose, but instead maintaining global empire that costs American taxpayers vast sums while generating resentment abroad and providing no security benefits at home. Intelligence community budget classified but estimated at approximately $90 billion annually, funds operations including regime change attempts and assassination programs and surveillance programs and other activities that violate American values and international law and generate blowback that makes America less safe while consuming resources that could address domestic needs. Foreign aid budget exceeds $50 billion annually, funding governments worldwide, including authoritarian regimes and corrupt governments that serve American strategic interests rather than serving their own populations, creating resentment among foreign populations who view American aid as supporting their oppressors. Total spending on foreign operations, including military and intelligence and foreign aid, exceeds $1 trillion annually, representing resources that could transform American society if redirected toward domestic priorities, but instead fund global interventionism serving elite interests rather than popular interests. $4.3 billion diverted from welfare represents a small fraction of total waste in federal budget, but represents particularly egregious example because funds were specifically appropriated to help most vulnerable Americans but were stolen to fund operations that Congress appropriated separate funding for, making diversion completely unnecessary except as mechanism for evading oversight and for conducting operations beyond congressional authorization. Diversion suggests systematic contempt for rule of law and systematic contempt for congressional oversight and systematic contempt for American people whose taxes fund government operations and who expect that appropriated funds will be spent for designated purposes rather than diverted to purposes that officials prefer but Congress didn't authorize. Fraud mechanism involved manipulating welfare program administration through creating fake recipients, through inflating benefit amounts, through processing payments to non-existent service providers, through double billing for services, and through other techniques that generated excess payments that could be diverted without triggering immediate detection. Fake recipients included identities created using stolen social security numbers, identities of deceased individuals whose deaths weren't reported to agencies, identities of individuals who moved abroad but whose addresses were maintained domestically, allowing continued benefit payments. These fake recipients numbered approximately 40,000 across multiple programs, generating total benefits exceeding $1 billion over 6 years, representing systematic identity fraud requiring coordination across multiple offices and multiple officials, suggesting organized operation rather than isolated individual fraud. Inflated benefit amounts involved manipulating eligibility determinations to qualify recipients for maximum benefits regardless of actual eligibility, manipulating payment calculations to pay amounts exceeding eligible amounts, and processing retroactive payments covering periods before eligibility began or after eligibility ended. These inflated payments generated approximately $800 million in excess payments over 6 years, representing manipulation of complex eligibility rules and payment formulas, requiring technical knowledge, suggesting involvement of officials with detailed understanding of program administration rather than external fraudsters lacking such knowledge. Payments to non-existent service providers involved creating shell companies claiming to provide services to welfare recipients, including medical services, housing services, job training services, and other services that programs pay providers to deliver to recipients. Shell companies submitted invoices for services never rendered, submitted invoices for services rendered to non-existent recipients, submitted invoices at rates exceeding normal market rates, and employed other billing fraud techniques, generating approximately $1.2 billion in fraudulent payments over 6 years. These shell companies required bank accounts to receive payments, requiring establishment of companies with apparent legitimacy, including business licenses and tax identification numbers, suggesting sophisticated operation rather than crude fraud easily detected through basic verification. Double billing involved submitting claims to multiple programs for same services, creating situations where single service generated multiple payments from different funding sources, allowing total payments to exceed actual service costs and allowing diversion of excess payments. This double billing generated approximately $300 million in excess payments over 6 years, representing exploitation of poor coordination between programs and poor data sharing between agencies that prevented detection of duplicate claims until auditors conducted detailed reconciliation across multiple systems. Additional fraud techniques generated remaining $1 billion through various manipulations, including processing benefit payments after recipients died, but before deaths were reported, allowing continued payments that family members or fraudsters could collect, processing payments to recipients who moved abroad and became ineligible but whose foreign addresses were hidden through maintaining domestic mailing addresses, manipulating income reporting to maintain eligibility despite income increases that should have reduced or eliminated benefits, and other techniques exploiting gaps in verification systems and gaps in oversight procedures. Investigation into fraud began after routine audit identified anomalies, including unusually high benefit payments in certain geographic areas, unusual patterns in service provider billing, and mismatches between reported program participation and demographic data, suggesting that reported participation exceeded likely eligible populations. Auditors expanded investigation after initial findings suggested systematic problems rather than isolated errors, leading to comprehensive review across multiple programs and multiple years, revealing full scope of fraud totaling $4.3 billion. Auditors referred findings to law enforcement after determining that fraud appeared deliberate and coordinated rather than resulting from administrative errors or individual opportunistic fraud by recipients or providers. Law enforcement investigation revealed that fraud involved government officials at multiple levels, including program administrators who manipulated eligibility determinations and payment calculations, payment processors who approved payments despite red flags, supervisors who overrode fraud alerts, and senior officials who protected subordinates from accountability when irregularities were discovered. Investigation identified approximately 200 officials involved in fraud, either through active participation or through knowing failure to report suspicious activities they witnessed, creating network of complicity extending across multiple agencies and multiple offices. Investigation obtained emails showing coordination between officials discussing how to structure transactions to avoid detection, showing officials instructing subordinates to approve questionable payments, showing officials threatening whistleblowers who questioned suspicious activities. Investigation also identified approximately 50 contractors and consultants involved in fraud through submitting false claims, through establishing shell companies to receive payments, through laundering diverted funds through complex transactions, and through other activities supporting fraud scheme. Some contractors were former government officials who left public service and immediately established companies that began receiving questionable payments, suggesting that officials planned their post-government activities while still in government service, creating conflicts of interest where officials awarded contracts to themselves or to associates. Investigation documented meetings between government officials and contractors where payment arrangements were discussed, showing that payments were negotiated rather than resulting from competitive bidding, suggesting corruption where contracts were awarded based on relationships rather than merit. Documents show that diverted funds ultimately funded covert operations in multiple countries, including operations in Middle East attempting regime change, operations in Africa supporting particular factions in conflicts, operations in Latin America countering governments that opposed American interests, and operations in Asia gathering intelligence and conducting influence campaigns. These operations were funded through official appropriations, but additional funding from diverted welfare funds allowed operations to expand beyond authorized levels or allowed operations that Congress specifically declined to fund through official appropriations, giving agencies and officials ability to pursue their preferred policies regardless of congressional oversight or public opinion. Specific operations funded through diverted welfare money included providing weapons and training to Syrian opposition groups fighting government during civil war, even after Congress became skeptical about supporting opposition that included extremist elements, supporting particular factions in Libya after government fell, creating continued instability that Congress didn't want to fund officially, supporting regime change attempts in Venezuela through funding opposition groups after direct military intervention became politically impossible, conducting surveillance operations in allied countries that would have generated diplomatic incidents if officially acknowledged. These operations represent policy preferences of intelligence community and foreign policy establishment that don't enjoy congressional support or public support, but that were pursued anyway using diverted welfare funds to evade oversight. Pentagon officials denied knowledge of welfare diversion, but documents show coordination with intelligence agencies suggesting Pentagon awareness, even if Pentagon didn't directly participate in diversion. Emails show Pentagon officials requesting additional funding for operations and intelligence officials responding that funding would be available through alternative sources without specifying that alternative sources were diverted welfare funds. Emails show Pentagon officials questioning funding sources and intelligence officials instructing Pentagon not to ask questions about funding origins, creating plausible deniability where Pentagon could claim ignorance while benefiting from fraudulent funding. This arrangement allowed Pentagon to conduct operations beyond authorized levels while maintaining official distance from fraud, protecting senior Pentagon officials from prosecution, while enabling them to achieve operational objectives through illegally diverted funds. Congressional oversight failed completely because intelligence committees that should oversee such operations weren't informed about diverted funding, and because committees have limited investigative resources, and because committees depend on agencies to voluntarily disclose problems rather than having independent means of discovering agency misconduct. Intelligence committees learned about diversion only after whistleblowers provided documents directly to committee staff rather than through routine oversight, suggesting that existing oversight mechanisms are completely inadequate for detecting agency misconduct when agencies choose to conceal activities from Congress. Committee members expressed outrage after learning about diversion, but outrage produced no consequences because Department of Justice declined to prosecute, citing difficulties proving criminal intent and citing concerns about classified information becoming public during trials, creating a situation where officials responsible for $4.3 billion fraud face no accountability. Media coverage of fraud has been minimal because major media outlets depend on government sources for national security reporting, and because exposing fraud would anger those sources, potentially cutting off access to future stories, because intelligence agencies actively discourage coverage through informal pressure on editors and publishers, because story is complex requiring explanation of multiple programs and multiple agencies, making it difficult to communicate to general audiences in formats media prefer, and because story challenges narratives about government competence and oversight effectiveness that media generally accept. Few media outlets covered story beyond brief mentions, and no outlet conducted investigative follow-up examining how fraud occurred and identifying responsible officials and demanding accountability, creating a situation where massive fraud receives less coverage than trivial political controversies, suggesting that media priorities reflect elite interests rather than public interests. This is your last warning because fraud continues despite exposure, and because officials responsible for theft remain in positions where they can continue diverting funds, and because oversight mechanisms proved completely inadequate, suggesting that only sustained public pressure can force accountability and reform. Demand answers from your representatives about why $4.3 billion disappeared from welfare programs without generating prosecutions. Demand explanations for why officials involved in fraud remain employed in government rather than facing criminal charges. Demand reforms ensuring that welfare appropriations cannot be diverted to unauthorized purposes through better tracking of payments and better verification of recipients and providers and better coordination between agencies to detect fraud patterns. Demand independent investigation by special prosecutor not connected to agencies involved in fraud because Department of Justice declined prosecution citing conflicts that should have required independent review ensuring impartial justice. Department of Justice declined to prosecute officials involved in $4.3 billion fraud, claiming that evidence was insufficient to prove criminal intent beyond reasonable doubt and claiming that classified information involved in case would prevent public trial without compromising national security, creating convenient excuses that allow officials to escape accountability for massive theft. These excuses are transparently inadequate because documentary evidence showing coordination between officials and showing approval of fraudulent payments despite red flags demonstrates intent, clearly making insufficient evidence claim implausible, and because classified information concerns could be addressed through closed proceedings or through sanitized evidence rather than requiring complete abandonment of prosecution, making national security claim appear as pretext for protecting officials rather than genuine concern about security. Real reason Department of Justice declined prosecution is conflict of interest, where Justice Department officials who would oversee prosecution have relationships with officials who would be prosecuted, including former colleagues and political allies and individuals who could retaliate against prosecutors through damaging their careers, making impartial prosecution impossible when prosecutor and subjects of investigation work within same government and operate within same political networks. This structural conflict requires independent prosecutor appointed from outside government without career interests tied to protecting government officials and without political loyalties, preventing aggressive prosecution of officials regardless of rank or connections. Special prosecutor should be appointed by panel of federal judges rather than by attorney general who is political appointee with loyalty to administration, ensuring that prosecutor selection is insulated from political pressure and ensuring that prosecutor has independence necessary to pursue case wherever evidence leads without fear of retaliation or career consequences. Special prosecutor must have unlimited budget, ensuring adequate resources to investigate complex fraud spanning multiple agencies and multiple years, requiring extensive document review and witness interviews and forensic accounting. Complex fraud investigations are extraordinarily expensive because they require teams of investigators examining millions of documents, require forensic accountants tracing money through complex transactions across multiple accounts and multiple jurisdictions, require interviewing hundreds of witnesses including current and former officials and contractors and financial professionals, require expert witnesses providing testimony about accounting standards and government contracting and agency procedures, and require litigation support when agencies resist document production or when witnesses refuse cooperation, requiring court enforcement of subpoenas. These costs easily reach tens of millions of dollars for investigation lasting several years, examining fraud spanning 6 years across multiple agencies and multiple programs, making unlimited budget essential rather than luxury, because inadequate funding would force investigators to make choices about which leads to pursue, potentially missing critical evidence that could establish complete picture of fraud and identify all participants. Budget limitations have sabotaged previous fraud investigations when special prosecutors or inspectors general ran out of funds before completing investigations, forcing premature conclusions based on incomplete evidence, allowing some participants to escape detection and allowing some fraud mechanisms to remain unexplained. Unlimited budget doesn't mean wasteful spending, but means that investigation can pursue all relevant leads and can hire necessary expertise and can litigate document disputes without making cost-benefit calculations about whether particular evidence is worth expense of obtaining it. Every participant in $4.3 billion fraud should be identified through thorough investigation rather than having investigation stop after identifying most obvious participants because budget ran out before investigators could follow additional leads that would have revealed complete conspiracy. Special prosecutor must have broad subpoena power, compelling testimony from current and former officials, and compelling production of documents from agencies and from contractors and from financial institutions holding records showing money flows. Broad subpoena power is essential because agencies will resist voluntarily providing documents that incriminate officials and because witnesses will refuse to testify voluntarily when testimony might expose them or colleagues to prosecution, and because financial institutions will cite privacy laws refusing to provide records without legal compulsion. Subpoena power must extend to all relevant entities, including executive branch agencies that might claim executive privilege, legislative branch entities that might claim speech or debate clause immunity, contractors that might claim proprietary business information protections, and foreign financial institutions that might claim foreign law prevents disclosure, requiring international legal cooperation through mutual legal assistance treaties. Subpoena enforcement must be swift, with courts prioritizing compliance motions, ensuring that entities cannot run out investigative clock through prolonged litigation challenging subpoenas. Every month of delay in obtaining documents or testimony is month that witnesses' memories fade, and month that documents might be destroyed, and month that participants might coordinate cover stories, making enforcement speed critical to investigative success. Courts should impose substantial fines for non-compliance with subpoenas, increasing daily until compliance occurs, creating financial incentive to cooperate immediately rather than litigating every document request, hoping to exhaust investigative resources through forcing expensive court battles over each category of evidence. Special prosecutor must have authority to grant immunity to lower-level officials in exchange for testimony against senior officials who directed fraud, ensuring that witnesses cooperate rather than remaining silent to protect themselves or protect superiors. Immunity authority is critical for penetrating conspiracies where participants remain silent to avoid self-incrimination, knowing that any testimony admitting participation exposes them to prosecution. Without immunity authority, prosecutor faces choice between granting informal leniency through declining prosecution in exchange for cooperation, creating appearance of favoritism and arbitrary justice, or accepting that key witnesses will invoke Fifth Amendment, preventing testimony that could establish complete picture of fraud and identify senior officials who directed operations. Immunity grants should be use immunity preventing prosecution based on compelled testimony, but not transactional immunity preventing prosecution entirely for crimes committed, allowing prosecutors to pursue independent evidence against immunized witnesses if such evidence exists. Use immunity balances competing interests of obtaining testimony while preserving possibility of prosecuting witnesses who committed serious crimes using evidence independent of immunized testimony. Immunity should be granted strategically, starting with lower-level participants who have knowledge of senior officials' involvement and working up organizational hierarchy, using each round of immunized testimony to build cases against more senior officials, ultimately reaching those who directed fraud at highest levels. Immunity grants should be conditioned on complete truthfulness, with agreement specifying that any false statements void immunity, exposing witnesses to prosecution both for underlying fraud and for perjury making. Witnesses understand that cooperation must be genuine and complete rather than partial disclosure designed to protect themselves or preferred colleagues. Prosecutors should verify immunized testimony through documents and through other witnesses before granting final immunity, ensuring that witnesses aren't manipulating process by providing false information that misdirects investigation away from actual wrongdoing. Special prosecutor must have multi-year appointment, ensuring sufficient time to conduct thorough investigation and prosecution without artificial deadlines forcing premature conclusions. Complex fraud investigations require years, not months, because initial document review reveals additional leads requiring additional document requests and additional witness interviews, because witnesses initially refuse cooperation requiring immunity negotiations or prosecution threats before they agree to testify, because agencies resist document production requiring court enforcement consuming months before documents are produced, because forensic accounting requires painstaking reconstruction of money flows through multiple accounts over multiple years, and because prosecutions require additional time after investigation concludes to prepare charging documents and to litigate pretrial motions and to conduct trials that may last months when defendants are numerous and evidence is voluminous. Investigations forced to conclude prematurely by arbitrary deadlines inevitably miss evidence and overlook participants, because complex conspiracies cannot be fully understood until all leads are pursued and all witnesses interviewed and all documents reviewed, creating a situation where deadline pressure causes investigators to focus on most obvious wrongdoing while missing sophisticated fraud mechanisms and while failing to identify all participants, particularly those who are careful about concealing involvement. Multi-year appointment should be open-ended, subject only to special prosecutor reporting progress to appointing judges who can extend appointment as needed based on whether investigation is making reasonable progress toward completion rather than being stalled or being conducted inefficiently. Multi-year appointment protects special prosecutor from political pressure to conclude investigation quickly when findings might embarrass powerful officials or when attention to investigation becomes politically inconvenient for administration. Officials under investigation will lobby administration to terminate investigation or to pressure special prosecutor to conclude quickly, accepting incomplete findings that don't fully establish culpability, particularly of senior officials who have political connections protecting them. Multi-year appointment insulated from political interference ensures that investigation continues until complete picture emerges regardless of political consequences, creating accountability that political process alone cannot provide. Independent investigation must examine not only fraud itself but also failures of oversight that allowed fraud to continue for 6 years without detection despite multiple opportunities for auditors and inspectors general and congressional committees to discover diversions. Oversight failures are arguably more significant than fraud itself because fraud will always be attempted by unethical officials but should be detected and stopped by oversight mechanisms specifically designed to prevent and detect such fraud. That fraud continued for 6 years means systematic failure of every oversight mechanism that should have detected diversions within months of fraud beginning, making oversight failures critical focus of investigation to understand how systems failed and how to reform systems preventing future fraud. Investigation must identify why auditors didn't detect fraud sooner, examining whether audit procedures were inadequate or whether auditors identified problems but were prevented from pursuing investigations by supervisors protecting fraud. Audit procedures might be inadequate if auditors only examine small samples of transactions, allowing fraud to hide in unexamined transactions, if auditors don't verify recipient identities, allowing fake recipients to go undetected, if auditors don't verify service provider legitimacy, allowing shell companies to receive payments, or if auditors don't trace money flows beyond initial recipients, allowing diversions to remain concealed even when initial payments are examined. Alternatively, auditors might have identified problems through finding unusual payment patterns, or through finding recipients who couldn't be verified, or through finding providers that appeared suspicious, but supervisors might have prevented pursuing investigations, claiming that findings were insufficient to warrant expanded audit, or claiming that agency priorities required focusing audit resources elsewhere. Investigation must identify why inspectors general didn't discover fraud through their oversight responsibilities, examining whether IG offices lack resources or independence necessary to conduct effective oversight, or whether IGs were complicit in covering fraud to protect agencies they're supposed to oversee. Inspector general offices are specifically tasked with preventing and detecting fraud within agencies, making their failure to discover $4.3 billion fraud over 6 years particularly troubling, suggesting either that IGs lack basic competence necessary for their roles or that IGs are compromised through institutional loyalties to agencies, preventing truly independent oversight. Investigation should examine IG staffing and budgets, determining whether offices have adequate investigators and auditors, or whether resource constraints prevent comprehensive oversight. Should examine IG independence, determining whether IGs face retaliation or career consequences when findings embarrass agencies, and should examine specific fraud cases, determining whether IGs received tips about diversions that weren't pursued for reasons that need explanation. These oversight failures are arguably more serious than fraud itself, because fraud would have been impossible without systematic failures of multiple oversight mechanisms that are supposed to prevent exactly this type of diversion, creating a situation where entire accountability system failed simultaneously, suggesting either incompetence on massive scale or deliberate subversion of oversight to enable fraud. Understanding how oversight failed is essential for preventing future fraud, because fixing systems that allowed this fraud to occur for 6 years is only way to ensure that similar frauds don't continue indefinitely, with officials confident that oversight mechanisms cannot detect their crimes as long as they're minimally careful about concealing activities. Demand congressional hearings with subpoena power, compelling testimony from officials involved in fraud, and compelling production of documents showing how fraud occurred and who authorized diversions and where money ultimately went. Congressional hearings serve multiple purposes, including gathering facts about fraud that aren't available through normal oversight channels, creating public record of wrongdoing that generates political pressure for accountability, educating public about how fraud occurred and why oversight failed, creating informed citizenry capable of demanding reforms, and demonstrating to officials that fraud will be exposed and investigated even if prosecutions don't occur, creating deterrent effect that reduces future fraud even without criminal convictions. These purposes require hearings that are genuinely investigative rather than theatrical, with members seriously questioning witnesses and following evidence rather than using hearings primarily for political messaging that doesn't advance factual understanding. Hearings must compel testimony from senior officials who directed fraud, including program administrators who manipulated eligibility and payments, supervisors who approved fraudulent transactions, agency heads who created environments where fraud thrived, and contractors who received diverted funds. These witnesses will likely invoke Fifth Amendment rights against self-incrimination, requiring committees to grant immunity, compelling testimony that can be used for congressional purposes, even if testimony cannot be used for criminal prosecution due to immunity. Immunity grants are appropriate when public interest in disclosure exceeds interest in prosecuting individual witnesses, particularly when Department of Justice already declined prosecution, making immunity cost-free while generating testimony that otherwise would remain concealed. Hearings must compel production of documents that agencies have refused to provide through normal oversight, including internal communications showing how fraud was coordinated, financial records showing money flows from appropriations through diversions to final destinations, audit reports identifying problems that were ignored, and inspector general findings that were suppressed. Agencies will resist document production, claiming executive privilege or claiming national security or claiming various other privileges that courts have recognized in certain contexts, but that shouldn't apply to congressional oversight of fraud, particularly when fraud involved misappropriation of appropriated funds that Congress has absolute authority to oversee as part of constitutional power of the purse. Committees must be prepared to litigate document disputes in court, enforcing subpoenas through contempt citations if necessary, demonstrating that congressional oversight is serious rather than accepting agency resistance to transparency. Hearings must examine specific transactions, tracing particular diversions from initial authorization through intermediate accounts to final destinations, showing exactly how money moved and who approved each step, creating detailed public understanding of fraud mechanisms. This granular examination serves educational purpose, showing citizens how fraud works, and serves investigative purpose, identifying all participants in fraud, not just senior officials, but also mid-level employees who process transactions and contractors who receive payments. Hearings must also examine oversight failures, asking auditors why they didn't detect fraud sooner, and asking inspectors general why their offices didn't discover diversions, and asking committee staff why previous oversight didn't identify problems, creating accountability, not just for fraud, but for oversight failures that enabled fraud. Hearings should be broadcast live, ensuring maximum public access rather than conducted in closed session where findings could be concealed or sanitized. Transparency serves multiple purposes, including generating public pressure for accountability, creating permanent record that prevents revisionist accounts of fraud, educating future officials about consequences of fraud by showing current officials facing public humiliation and potential prosecution. Closed hearings would allow agencies to claim sensitive information, prevents public disclosure, creating opportunities to conceal embarrassing details and to avoid accountability that public exposure would create. Only genuinely classified information should be discussed in closed session, with presumption being that hearings are public unless specific information clearly requires protection for legitimate national security reasons rather than for bureaucratic convenience or political protection. Public reports must include detailed descriptions of fraud mechanisms, explaining how diversions occurred and how oversight failed, making citizens understand what happened rather than accepting vague summaries that minimize wrongdoing. Reports must name individuals involved in fraud at all levels, creating personal accountability rather than institutional accountability that diffuses responsibility, allowing individuals to escape consequences by blaming agencies or systems. Reports must quantify harm, including how much money was stolen and how many recipients were deprived of benefits and what services went unfunded because appropriated money was diverted, creating concrete understanding of fraud impacts rather than abstract discussion of improper payments. Reports must include recommendations for reforms addressing oversight failures that enabled fraud, ensuring that investigation produces systemic improvements rather than merely documenting past wrongdoing without preventing future fraud. Recommendations should be specific and actionable, identifying particular regulatory changes or statutory amendments or procedural reforms necessary to prevent similar fraud, rather than vague suggestions about improving oversight that agencies can ignore or implement superficially without meaningful change. Reports should include timelines for implementing recommendations and should identify which officials or agencies are responsible for each reform, creating accountability for implementing reforms rather than allowing recommendations to be ignored after public attention moves to other issues. Classification of any findings should be reviewed by independent panel rather than by agencies investigated, ensuring that classification serves genuine national security purposes rather than serving to conceal embarrassment or wrongdoing. Agencies have obvious incentive to classify information about their own misconduct, claiming that disclosure would harm national security when real concern is that disclosure would harm agency reputation or expose officials to prosecution. Independent review would ensure that only information genuinely requiring classification for national security remains classified, while presumption should be maximum transparency unless compelling security reasons require secrecy. Demand prosecution of all officials involved in fraud regardless of rank or political connections, ensuring that $4.3 billion theft generates consequences, deterring future fraud. Prosecution serves multiple purposes, including punishing wrongdoing through criminal sentences that may include prison time, deterring future fraud by demonstrating that officials face serious consequences for stealing public funds, recovering stolen money through restitution and forfeiture, and vindicating rule of law by demonstrating that officials are not above law regardless of positions or connections. Without prosecutions, fraud becomes cost-free calculation where officials who steal successfully keep money and officials who are caught merely lose jobs without facing criminal penalties, creating perverse incentive structure where potential rewards from fraud far exceed potential costs, making fraud rational choice for unethical officials. Prosecutions must target officials at all levels involved in fraud, not just convenient scapegoats at lower levels who can be sacrificed to protect senior officials actually responsible for directing fraud. Pattern in government scandals is to prosecute mid-level officials while protecting senior officials through claims that seniors didn't know about subordinates' activities, even when evidence suggests that fraud required senior approval or senior knowledge. This pattern must be reversed, with presumption being that senior officials are responsible for activities in their organizations unless they can prove they took reasonable steps to prevent fraud and to detect fraud and to stop fraud once detected, creating accountability structure where leadership bears responsibility for organizational failures rather than escaping accountability by claiming ignorance. Prosecutions must include contractors who received diverted funds and who submitted false claims, not just government officials who approved payments. Contractors are often treated as victims who were deceived by government officials, when reality is that contractors actively participated in fraud by creating shell companies and submitting false invoices and laundering money, making contractors equally culpable with government officials. Contractors should face prosecution and should face debarment from future government contracts and should be required to repay all fraudulent payments plus penalties, ensuring that participating in fraud makes contractors financially worse off than honest dealing would have made them. Prosecutions must be pursued even when officials resign or retire after fraud is discovered, rather than allowing officials to escape accountability by leaving government. Officials involved in $4.3 billion theft should face prosecution regardless of current employment status, because resigning doesn't absolve criminal liability and because allowing resignation to prevent prosecution creates obvious incentive for officials to resign once fraud is discovered, preventing accountability. Prosecutions can proceed against former officials using same evidence and same legal theories that would apply to current officials, ensuring that leaving government doesn't create immunity from prosecution for crimes committed while in government. Demand restitution, requiring officials and contractors who profited from fraud to repay diverted funds, ensuring that consequences include financial penalties, not just potential criminal sentences that often aren't imposed. Restitution serves a distinct purpose from criminal penalties by attempting to make victims whole through recovering stolen money rather than merely punishing offenders through imprisonment. Restitution should be ordered for all officials and contractors convicted of fraud offenses, requiring repayment of all diverted funds that flowed to them or through accounts they controlled or through entities they owned, creating strong financial incentive against fraud by ensuring that fraud cannot be profitable even if prison sentences are avoided through plea agreements or light sentences. Restitution orders should include penalties and interest, ensuring that officials repay more than they stole, making fraud costly even for those who enjoyed stolen money for years before restitution was ordered. Orders should survive bankruptcy, ensuring that officials cannot discharge restitution obligations through bankruptcy protection that would allow them to retain assets while avoiding repayment. Orders should include provisions for seizing assets, including homes and vehicles and investment accounts and retirement accounts, ensuring that officials cannot hide wealth accumulated through fraud by transferring assets to family members or to offshore accounts. Aggressive asset seizure sends message that fraud enrichment is temporary and that government will pursue stolen funds wherever they went and for however long necessary to recover taxpayer money. Restitution should also target contractors through civil litigation seeking return of all fraudulent payments plus damages for harm caused by fraud, including harm to welfare recipients who didn't receive benefits because funds were diverted. Litigation should employ False Claims Act, allowing private citizens to sue on behalf of government, with whistleblowers receiving percentage of recovered funds, creating financial incentive for insiders to report fraud and creating alternative mechanism for pursuing accountability when government declines to prosecute. Treble damages available under False Claims Act ensure that contractors who participated in fraud repay 3 times fraudulent payments received, making fraud extremely costly even if criminal prosecution doesn't occur, creating strong deterrent through civil liability even when criminal liability cannot be established beyond reasonable doubt. Demand systemic reforms, including better audit procedures, better fraud detection systems, better whistleblower protections, encouraging employees to report wrongdoing, better congressional oversight, including independent investigative staff not dependent on agencies for information. Systemic reforms address structural problems that enabled fraud rather than merely punishing individuals who exploited structural vulnerabilities. Improved audit procedures should include more frequent audits of high-risk programs, more detailed testing of payments rather than merely sampling small percentages of transactions, better data analytics identifying unusual patterns suggesting fraud, and mandatory rotation of auditors, preventing relationships between auditors and audited agencies that create reluctance to identify problems that would embarrass long-term partners. Better fraud detection systems should include real-time monitoring of payments, flagging suspicious transactions before payments are processed rather than discovering fraud years later through periodic audits when money is gone and recovery is difficult. Systems should compare payment data across programs, identifying recipients receiving benefits from multiple programs suggesting possible fraud, or identifying providers billing multiple programs for same services suggesting double billing. Systems should verify recipient identities against death records and against immigration records, ensuring that payments don't continue to deceased individuals or to individuals who left country and became ineligible. Systems should verify provider legitimacy against business registries and against professional licensing databases, ensuring that payments go only to legitimate businesses and licensed professionals rather than to shell companies existing only to receive fraudulent payments. Better whistleblower protection should include strong anti-retaliation provisions preventing agencies from firing or demoting or harassing employees who report fraud, should include financial rewards for whistleblowers whose information leads to recovery of stolen funds, creating incentive to report rather than remain silent, should include confidentiality protections preventing agencies from identifying whistleblowers to colleagues who might retaliate informally even if agency doesn't retaliate officially. Protections should extend to contractors and grantees who witness fraud, not just to government employees, ensuring that private sector participants in government programs can report fraud without losing contracts or grants that they depend on for revenue. Better congressional oversight should include dedicated investigative staff with expertise in forensic accounting and fraud detection rather than relying on agency self-reporting or on superficial budget reviews that cannot detect sophisticated fraud. Staff should have independent access to agency systems allowing direct examination of payment data rather than depending on agencies to produce reports that can be manipulated to conceal problems. Staff should coordinate across committees, ensuring that oversight of complex issues spanning multiple jurisdictions doesn't fall through cracks because no single committee has complete picture. Staff should have subpoena authority, allowing committees to compel information from agencies without requiring time-consuming negotiations that delay oversight and that allow agencies to run out clock until public attention shifts to other issues. Demand budget transparency, ensuring that all expenditures are traceable from appropriation to final recipient, preventing future diversions through maintaining clear documentation of how every dollar is spent. Budget transparency requires publishing detailed expenditure data in machine-readable formats, allowing citizens and researchers and journalists to analyze spending patterns and identify anomalies suggesting fraud or waste. Data should include not just aggregate spending by category, but transaction-level detail showing every payment, including date, amount, recipient, purpose, creating comprehensive record that makes diversions detectable through routine analysis rather than requiring elaborate investigations to uncover fraud. Transparency should extend to classified programs which currently operate with minimal oversight because expenditure details are classified, preventing public scrutiny and limiting even congressional oversight to small number of committee members who receive briefings rather than having access to detailed financial data. Classified programs should maintain same detailed financial records as unclassified programs, with records available to congressional oversight committees and to auditors and inspectors general even if records cannot be made public, ensuring that classification doesn't create blank check for agencies to spend without accountability. Transparency should include contracts showing not just prime contractors receiving payments but also subcontractors and the flow of money through contracting chains, ensuring that shell companies cannot hide in complex subcontracting arrangements. Should include grants showing not just grantee organizations but also individuals compensated through grants and purposes for which grant funds were spent, ensuring that grants don't become slush funds distributed to political allies under guise of legitimate program activities. Should include interagency transfers showing when appropriations made to one agency are transferred to another agency for expenditure, ensuring that agencies cannot evade oversight by moving money between agencies before spending for unauthorized purposes. Or accept that your children go hungry while officials steal welfare money funding foreign wars and intelligence operations serving no American interest. Choice is binary between demanding accountability and accepting continued theft, because middle ground doesn't exist where fraud stops voluntarily without consequences forcing officials to change behavior. Officials who stole $4.3 billion without facing prosecution or restitution or even public identification have every reason to continue stealing because their experience demonstrates that fraud is safe and profitable with minimal risk of detection and zero risk of meaningful consequences. Accept continued fraud and you accept that welfare appropriations will continue being diverted to purposes Congress didn't authorize, leaving genuine welfare needs underfunded while stolen money funds operations serving bureaucratic interests rather than national interests. Accept that $4.3 billion disappeared without consequences for responsible officials means accepting that theft of public money is normal rather than exceptional, and that officials serve themselves rather than serving public. $4.3 billion is not rounding error or accounting mistake, but massive deliberate theft requiring coordination across hundreds of officials over 6 years, suggesting systematic corruption rather than isolated wrongdoing by bad individuals within otherwise functional system. Accepting this theft without demanding accountability signals to all government officials that stealing is acceptable risk with potential rewards far exceeding potential costs, because even massive frauds generate no consequences beyond possibly losing job that officials would eventually leave anyway through retirement or resignation. Accept that fraud continues because exposure generated no accountability means accepting that oversight is theater rather than genuine check on official misconduct. Fraud was exposed through audit findings and whistleblower revelations and investigations documenting exactly how diversions occurred and exactly who participated, yet exposure generated no prosecutions and no restitution and no reforms and no consequences of any kind, demonstrating that exposure without accountability is meaningless. Officials learned from this episode not that fraud is dangerous, but that fraud is safe, because even when caught, they face no consequences beyond bureaucratic reorganization and promises of better oversight that everyone knows will be forgotten once attention shifts elsewhere. Accept that welfare programs remain underfunded because appropriated funds are stolen rather than delivered to intended recipients means accepting that increasing welfare appropriations won't help intended beneficiaries because additional appropriations will simply be stolen like previous appropriations were. Progressives who advocate increased welfare spending must confront reality that spending increases are meaningless when existing spending is diverted to unauthorized purposes, suggesting that fighting fraud is prerequisite to expanding programs rather than being a separate issue that can be addressed later after spending increases are achieved. Conservatives who oppose welfare spending should support aggressive fraud prosecution and oversight reform because fraud validates their skepticism about government efficiency and their concerns about waste-making fraud exposure opportunity to demand accountability rather than reason to defund programs that serve genuine needs. Accept that oversight failed completely because existing mechanisms cannot detect fraud when officials choose to conceal activities means accepting that democratic accountability is impossible and that officials operate without effective constraints beyond their own ethics, which this case demonstrates are insufficient to prevent massive theft. Oversight failure means that appropriations process is meaningless because funds appropriated for specific purposes can be diverted to different purposes without detection, making congressional power of purse ineffective. Oversight failure means that audits are ineffective because auditors either cannot detect fraud or are prevented from pursuing findings when fraud is detected, making financial accountability mechanisms worthless. Oversight failure means that inspectors general are ineffective because they didn't discover fraud that should have been obvious to anyone examining programs carefully, suggesting that IGs either lack resources or lack independence or lack competence necessary to fulfill oversight responsibilities. Accept that your taxes fund corruption rather than funding help for Americans in need means accepting that you work partly for corrupt officials who steal your money rather than working entirely for yourself and your family. Every dollar paid in taxes includes portion that will be stolen by officials rather than spent for designated purposes, making taxation partly tribute to corrupt government rather than entirely contribution to public services. Your work enriches corrupt officials who live comfortably on stolen public money while you struggle to pay taxes and while intended beneficiaries of programs go without services because appropriated funds were diverted. This situation is morally intolerable, making demand for accountability moral imperative, not merely political preference. Your silence enables continued theft because officials interpret silence as permission to continue stealing. When citizens don't demand accountability for exposed fraud, officials correctly conclude that citizens either don't care about fraud or don't believe accountability is possible, making officials confident that they can continue stealing without risk. Your silence tells officials that $4.3 billion theft isn't serious enough to generate sustained public outrage, requiring response, making officials confident that future frauds will be similarly ignored as long as frauds aren't so egregious that media coverage becomes unavoidable. Your complacency ensures continued fraud because officials need only minimal concealment to avoid detection when oversight is ineffective and when citizens don't demand aggressive investigation of suspicious activities. Complacency allows fraud to be normalized as cost of government rather than being treated as criminal activity requiring prosecution and punishment and systemic reform. Complacency allows officials to develop sophisticated rationalizations for theft, including claiming that diverted funds served important purposes that Congress should have funded but didn't, or claiming that bureaucratic complexity made tracking money difficult, creating innocent mistakes rather than deliberate theft. Your failure to demand accountability guarantees that officials will continue stealing with impunity because impunity breeds contempt for rules and for oversight, making officials progressively bolder in stealing larger amounts through less sophisticated concealment methods. Officials involved in $4.3 billion theft demonstrated through their actions that they held oversight in contempt, believing correctly that oversight mechanisms were too weak to detect diversions, and that even if fraud was detected, no consequences would follow. Future officials will be emboldened by this precedent, stealing even more brazenly because they will know from this case that massive theft generates no accountability, creating progressive deterioration of government integrity until corruption becomes so pervasive that reform becomes impossible without revolution. This ends tonight if you choose to fight for accountability, demanding that representatives explain why massive fraud generated no consequences and demanding reforms preventing future theft and demanding prosecution of officials who stole $4.3 billion from programs meant to help most vulnerable Americans. Fight means sustained pressure, not momentary outrage that dissipates when next scandal distracts attention. Fight means contacting representatives repeatedly, demanding updates on investigations and on prosecutions and on reforms. Fight means organizing with neighbors and with advocacy groups, creating collective voice that representatives cannot ignore. Fight means voting against representatives who protect corrupt officials or who oppose oversight reforms, showing that protecting corruption has electoral consequences. Fight means attending town halls, demanding answers, and refusing to accept vague promises of taking concerns seriously without concrete commitments to specific actions on specific timelines. Fight means supporting primary challengers against incumbents who tolerate corruption, creating competition that forces officials to prioritize accountability over protecting colleagues. Fight means supporting media outlets that investigate fraud and expose wrongdoing, creating market incentives for investigative journalism that holds officials accountable when government oversight fails. Fight means educating yourself about budget processes and oversight mechanisms, enabling informed advocacy that officials cannot dismiss through claiming citizens don't understand complexity. Or this continues indefinitely if you remain silent silent, accepting that government serves officials rather than serving people, and accepting that corruption is normal, and accepting that accountability is impossible because systems designed to prevent fraud and to punish wrongdoing are captured by same officials committing crimes they're supposed to prevent. Silence guarantees continued theft on ever larger scale as officials grow confident that citizens will tolerate any level of corruption without demanding accountability. Acceptance normalizes corruption, making it a permanent feature of government rather than exceptional breakdown requiring correction. Complacency about accountability makes reform impossible because reform requires sustained pressure that complacent citizens won't provide, allowing officials to ignore calls for change, confident that pressure will dissipate quickly. Choose accountability, demanding investigations and prosecutions and restitution and reforms, ensuring that fraud doesn't pay and that officials face consequences, deterring future theft. Choose transparency, demanding public access to information about fraud and about oversight failures, ensuring that citizens can evaluate official performance and demand improvements. Choose justice, demanding equal application of law to officials who violated law, stealing billions from Americans who trusted government to spend appropriations for designated purposes. Demand answers now before officials destroy evidence and before witnesses are intimidated into silence and before political will for accountability dissipates as attention shifts to other scandals. This is your last warning because window for accountability is closing rapidly and silence now guarantees impunity forever.